Today is Monday, of course, we're joined by Steve Rhodes. Steve is the author of the Mastering Probability newsletter. Definitely recommend checking it out. If you haven't yet, we have a 30-day money-back guarantee. For whatever reason it doesn't work out, you can get your money back. We're betting that it will. Steve, how are you doing? Are you with us?
I'm doing great, Jacob. Yourself today?
Doing well.
So, look at the markets. I've got one of my main screens up right now. And when I just take a look at this towards the end of the day, where do my eyes gravitate to? And one of the places that they gravitate to is the spot VIX. And the reason that it gravitates to spot VIX is if we take a look at the upper left-hand panel about midway through, my cursor is on it right now, what we'll see is that we've had a one-day rate of change of minus 20% out there.
Yeah.
Now, the VIX has got some very cool tools that can help us to analyze what the market is communicating to us. And that's really what this is all about. We're trying to understand, has the market bottomed? Is this a counter trend move? Does it matter if it's light volume on the way up? All those types of things. But we also have to factor in the mere fact that we're in a holiday week.
Yes.
So you got schools closed, people vacation. I can tell you down here it's just jam-packed. So it's also a lightened type week out there. But if I just do this before we go to a break, I'll put this up on my chart, and then we'll come back and take a look at the VIX. This is the S&P 500. We're coming into Easter week. The cool thing about this tool is that I can go back 97 years and take a look at how the S&P is traded coming into Easter. This red line is where we're at today. You can see where the S&P typically rallies as you come into the Good Friday Easter weekend. But we'll take a look at the VIX when we come back from this.
Yeah, Steve, please stay there, folks. We'll be right back with Steve Rhodes after. Welcome back, everybody. So Jacob Shoup, you're watching the Tom O'Brien Show. We are joined right now by Steve Rhodes of the Mastering Probability newsletter. Before we went to the break, Steve was about to enlighten us on what's going on with the VIX and what that might mean for this week. Of course, the VIX right now is trading at 30.18. I think the average you usually have, Steve, is around like 15.20 on the long term. Of course, you had massive rip-ups in the VIX, hitting 60 over the last week. It's been quite volatile. What are you seeing right now with the VIX?
And so there's a number of different things really to discuss about the VIX. So what I have up on my screen, you were talking about how the VIX last week was up in the 60 area, 50, 60 area, or what have you. What's really important, if we take a look here, so I've got, if you look at I'm in the upper section of my chart, and it lists out each of the future contracts that I have for the VIX, April being the current contract that we're in. It's priced at 28.90. What you first notice here is that all of the forward future contracts are trading below that level. That sets up something that's referred to as contango. That is not a normal, natural thing for the VIX. If, for example, the VIX was worried about a longer-term event out there, we would see the May, June, July, August, September trading higher and trading above, likely the current contract out there. Above that, I have the spot VIX, which is trading out at 30.03. There's also three other indices that the CBOE created. So you can take a look at a 3-month version, a 6-month version, and a 1-year version. We can see that even here, this is in contango. And so that is going to straighten itself out. If we take a look at the 3, the 6, and the 1-year charts out there, the way that we can see that something is in contango is I have a ratio that divides the VIX by the 3-month or the 6-month or the 1 year.
Right.
And when we get above the 1 level, that tells us we're in contango. And if we go back and take a look at, now, these generate typically really good bottoming signals. So while there's all this fear and everything that's out there, or people are talking about it, all I'm doing is really looking at the charts. What are they signaling to you and I? Now, at this moment in time, even though the VIX has been falling, it has a 1-day rate of change below minus 20%. We're going to get back to that. We still are in contango. And not until we get those ratios back below the 1 level, we get the VIX that is back to normal, meaning that it is trading below forward future contracts out there. At that point, then this tool here would identify that last week was a bottom, a viable bottom out there, which subscribers and I went ahead and took that long position. So that's the first thing. But now we're not in the clear until we get below that 1 level, until we get back outside of that contango. Any questions about that? Because I know it's a concept maybe hard to grasp or what have you, but it's one of the very cool tools about the spot VIX, especially in times like this.
Yeah, no, I don't have any questions, but if you do, please put them in the Tiger chat, put them on YouTube, and we'll ask Steve. But yeah, I've really been watching the VIX quite a bit right now, reading what a lot of people are saying about it. It's been an amazing learning opportunity.
Yes. Well, and so one of the other things that's cool is today, right now, VIX is trading lower by minus 17%. Any close below minus 10% on the day triggers an initiation signal, an initiation to higher price. Okay. So I just want people to understand that as we come back and we take a look at some other charts.
Yeah, Steve, please stay right there. Folks, we'll be right back with Steve Rhodes after the break. Welcome back, everybody. We are joined right now by Steve Rhodes of Mastering Probability Newsletter. Steve, before we went to the break, taking a look at VIX. Of course, you're saying, what if it closes below that 10%? You usually get a sign of some movement up in the equities, or at least some further movement down in the VIX.
Yes, exactly.
Okay.
It's a signal that typically, if I'll go back to the chart out here so folks can see it, it's marked by these green arrows out there, and it especially works when we're coming off of bottoms or we're near lows versus when the signal might happen up towards a high out there. So I just want folks to be aware of that. Now, what the VIX also needs to do in order for the S&P 500 to really start cruising to the upside is it must close below its 50-day exponential moving average, and that presently is at 2506. We're at 30.39. If we do get that VIX start trading below the 50-day exponential moving average, that is a bullish signal out there, and just would add to the contango bottom signal that we have. We're just waiting for full confirmation of that. But we have other bottom signals that are present out here, and we can take a look at those. As an example, let me see what charts we've got up here. Those. Both for the daily and the weekly time frame. I'll get the charts up here momentarily. We're going to take a look at both the daily and weekly time frame right here. And so on the upper portion are the daily charts for the ES Mini, the NQ, the Dow, and the Russell 2000. Mm-hmm. Each of these have by the D point bottom patterns. I won't draw in the A to B equals CD. I'd rather just kind of take a look at the candlesticks out here. And it was on the trading session of April 9th that we had that nice big old bullish engulfing candle, the reversal in the market. And that set up the by the D point bottom pattern for the ES Mini. Inside the the ES Mini for its weekly time frame, it was Friday's rally that generated a bullish piercing candle. That too confirms a by the D point bottom pattern. Now, folks might notice that you can see bar number 8 on the weekly time frame chart for the ES, the NQ, and the Dow. That too can be a bottom signal, but we already have by the D point or Gartley buy patterns for the daily time frame and weekly time frame for the ES, the NQ, and the Dow. In the case of the Russell 2000, it has a by the D point bottom for its daily time frame and a Rhodes Momentum Indicator signal. But the weekly is a TD9 count bottom. That pattern completes this week. So the weakest of the indices giving us daily and weekly are saying we have bottomed. Okay. You had mentioned about also so in a light volume market, is there any kind of a tool that we can use that helps us to understand that, well, maybe it's okay? Right. And that tool really comes from the New York Stock Exchange, the Advanced Decline Oscillator. And that is the panel number 2 from the bottom out here. And what that does, Jacob, is that takes panel number 2 on my chart, the Advanced Decline line, and it generates the difference between the Advanced Decline line as it pertains to its 39 and 19 period exponential moving average. So we're looking at the difference. That's an oscillator. When it closes above the 0 threshold level, right now it's printing at 28 and change on my screen out there, that tells us that we're back in positive territory, more bullish territory. If we close above that today, get a second close tomorrow, that tells us that buyers are the ones that are in control of the market as relates to this tool. Sure. Now, the market won't move. My historical analysis of this is when the S&P 500 really moves is when we have both the Advanced Decline Oscillator in bullish position and the spot VIX in a bullish position, meaning below the 50-day exponential moving average. So if we start doing that, we're going to see the market continue to take off. Being above the 0 threshold level is very important. Of course, it's only 334. Anything can happen today. But right now, what I can share with people is we have got bottom signals across the board, daily and weekly equity future contract. We can go even deeper than that. And what I mean by that is if I go ahead and put up this set of charts, this is the ES Mini. And what I've added here is the RSP. And the RSP is the equal weighted ETF for the S&P 500. When I take a look at where the RSP, how this is trading today versus the SPY, this is telling me that it is not the heavily weighted instruments inside the S&P 500 that are moving the market higher. So it's coming from the other end of that spectrum, maybe the other 400 and some odd components out there. This is a bullish signal. Now, The trading session from back on April the 9th out there, big, huge rally. And where that rally ended was at the top of its profile, 165.37. For folks that aren't familiar with profiles help us to understand where buyers are located, where sellers are located, and within that range where both those buyers and sellers believe there's fair value. Also another critical tool here. So 165.37 is that key resistance level that if price closes above, and it's likely not going to do that today, but for the equal weighted ETF out there, boy, that'll be giving you a gigantic signal that the S&P 500 wants to continue its rally out here. The other levels of now in the case of the SPY, if we were just looking at the SPY, we can see that price closed above on Friday at the top of its profile, and it's trading above it as well right now, 533.17. The real important message comes from the equal weighted ETF, and we can switch from the S&P 500. We can take a look at the NASDAQ and do really the same thing out here. In the NASDAQ, the ETF for the equal weighted is QQEW. That's on the very right-hand panel of my screen. Now, again, if you take a look at the Qs right next to it, price closed above profile on Friday, trade above it today. That's a bullish signal out there. But it's really going to be the equal weight. And the equal weight is getting ready to move in towards a sell zone. And a sell zone, this is where, as your pilot, I say just fasten your seatbelt. Don't get up and go to the bathroom, unless you absolutely have to. But you've got a sell zone between 117.85 and 119.78 out there. If price can get through that, meaning above 119.78, well, first it'll set up an A to B equals CD pattern to the upside in the QQEW out there. The other area of resistance for those folks that are trading the futures or watching the equity futures, the ESM or the NQ is about to hit a sell zone. That's between 19,327 and 19,685. If price closes above 19,685, it's off to the races to the upside, maybe even back to new all-time highs out there. So I'm just seeing bottom patterns all over the place, daily bottom patterns, weekly bottom patterns. I like what the equal-weighted ETFs are doing out here. They, too, formed bottom patterns. If we take a look at the Dow has an equal-weighted ETF out there with only 30 stocks. I don't put as much emphasis on this, but even today, the equal-weighted Dow, that's the right-hand panel of my screen, is back inside its profile. That's a positive thing. It's trading above its oscillator and change line. That's a positive thing. It suggests that it wants to make a move up towards the 35.43 to 35.92 area. So I know market volume is light. I know we've got a bias to the upside in the S&P 500 for just simply the Easter breakout there. At least we have over the last 97 years. I can change this from 97 years to an even shorter period, say the last quarter of a century out there. And even in the last quarter of a century, you can see that the bias is to the upside. So I believe that this rally continues as we head into the Easter break.
Fantastic. Well, Steve, thank you so much for coming on, staying through the technical difficulties. We'll see you 11 a.m. Eastern time for the Trader's Edge.
Sounds great, Jacob.